Why are so many influencers telling you to sell out of your portfolio? There has been generally a little bit more fear than usual in the market now. I'm not saying this is wrong, but let me tell you my take on the market. As you know, interest rates just got cut. And before the cut, the day before, there's 95% chances of cuts, leading that 95% chance to get to a 100% chance. Not a huge move. The interest rate cuts means it's a slower economy and a slower job market. And there's also an 85% chance of another cut in October and a 65% chance of a cut in October and December. So 2 more cuts priced in for a total of 3 cuts. Basically, you want to be looking at is how is the market moving during this period. If we end up getting that 3rd cut, then the percent chance goes from 65 all the way up to 100% eventually. The stock market should realistically keep thriving in these market conditions. So personally, I'm staying invested until December 9th when the decision happens. Of course, if the market starts tanking or showing weakness during that time period, that is showing weakness even though we are going to get bullish news, which could lead to a little pullback or who knows, a recession. Of course, another fear is high valuations, since we are at higher valuations than things like a dot-com bubble and other recession points. Personally, that's not the best case scenario because the quality of companies have gone up so much in the growth multiples that companies like Palantir can trade at 600 PE and then they have so much growth potential and so much potential for the future that they can actually maybe quite justify those valuations, even though I'm not really interested at them in that price. Other people are. And next we have all these smaller cap stocks doing amazing. Red Check Box, Open Door, all these high speculative stocks are going absolutely crazy, which nearing a point of time usually happens around the end of a cycle. At the moral of the story, it is okay for these YouTubers and influencers to have more caution since they are usually picking more higher risk assets and they do have a higher chance to actually totally blow out your portfolio than some regular normal investor. So personally, I'm going to stay invested and maybe towards the end of the year I'll start taking a little bit more precautions, more cash, maybe more ETFs. But at the end of the day, nobody can really predict the stock market. It's only signals, and there's always going to be some sort of signal predicting a recession or predicting a massive bull run or to keep going. But at the end of the day, people pick and choose which signals they want to actually look at. That's exactly what I did in this video. I took information that I actually think is valuable and I put it inserted into your mind. That doesn't mean it's the right information to you, but for me, that's the most important information to me for the stock market going forward. A lot of people are making a ton of money from these risk-on assets, and since they have, it is honestly really reasonable to start de-risking your portfolio, especially if you've made 30, 40%, 100% gains on these really high, risky stocks. But if you're invested the same in ETFs and slow movers, then you really have nothing to worry about and should keep DCAing over time.